Thank you so much for your time on the show today, Tilewa. And let's first get into the IMF's projections. And what do you make of the IMF's projections for Nigeria?
Well, I think they're pretty reasonable considering the situation that we find ourselves in. So what that means is that the Nigerian economy at least will come out of recession this year and will have some sort of marginal growth. So the the trajectory for growth is positive. So it's now important that within the course of this year, the Nigerian government should implement policies that will sustain growth. And hopefully we might be in for a surprise by the year end and exceed these growth projections. And I think that should be the objective.
All right, now quite a lot when you look at how the COVID-19 pandemic has had its impact on Nigeria. First, talking about the health scare there and the lockdowns we saw in 2021. We saw the central bank, the MPCA, urging the government not to engage in further lockdowns into this year. What do you make of the MPC's advice to the government?
Well, I think we could see the negative impact that the lockdown had on the Nigerian economy. And that also led into a lot of social unrest with the NSAS protest. And the impact on the economy was quite significant. And just as we were coming out of that lockdown, we had the NSAS protest, which further worsened the problem. So now that we have some sign of recovery, I think the fear is that if we go into another lockdown, we'll have a double dip recession, which will be difficult to recover from. So now that we are on a trajectory for growth, I think the policies now are to sustain it. And I think that was why in the last MPC, rates were maintained. And if we can maintain these rates and with the low interest rate regime, let's hope that can create a stimulus for the real sector to be able to invest and create some growth.
All right, now still on the growth projections for Nigeria, we've seen oil prices improve relatively in recent months, and we're seeing the Nigeria's external reserves all the better for that so far. But when you look at how things play out, especially with budgeting into 2021 and the deficit that Nigeria's government is faced with, how do you think the government should play things out with the improved oil prices?
Well, even as you've seen the marginal improvement in the oil prices, the relative impact on our reserves are minimal, and we don't see anything significant. Oil prices will have to hit close to $100 a barrel for us to be able to resolve our deficits and our fiscal problems. The problem, of course, in Nigeria is fiscal. The fact that 85% of our revenues is going towards debt service, which is unsustainable, and that is the primary reason why we are enjoying low interest rate regime. The federal government cannot afford to borrow at higher rates. That is the current reality we face ourselves. So it is important that government should take significant steps to be able to correct to remove the structural deficits and improve the fiscal position of the federal government, because the federal government is beginning to crowd out the private sector in terms of demand for credit. And most of the financing has been through ways and means by the central bank. And a lot of agencies are beginning to raise red flags on that. So the problem in Nigeria right now is that it's high time that the federal government, through the public spending, should put its house in order, because it's beginning to weigh negatively on economic growth.
Yeah, because there's quite a lot to be done. The government is trying to do when it comes to this revenue drive. We've seen, the Finance Act being implemented so far. We're also seeing other initiatives from the government to talk around, selling government assets to finance the budget as well. What do you make of these moves by the government to improve finances?
Well, it's obviously whatever they're doing is working, because if you take a look at the numbers from the tax office, it shows about 25 to 27% increase in revenue from the year up. Considering the fact that we had these problems last year with the lockdown, it's pretty impressive, very impressive that you're getting that kind of marginal increase in tax collections, mostly from corporates and VAT, corporate tax income and VAT. So it's quite impressive, in excess of 2 trillion naira. So these are positive numbers, and we need to see that sustained over a period of time for it to achieve the desired results. So the problem now is the sustainability of policy to be able to achieve those results. But another bottleneck remains in the fact that we don't have a single window for foreign exchange. We have a static exchange rate mechanism, which also tends to cause a lot of distortions. So all these structural problems need to be addressed and removed so that we can free up the economy for sustained economic growth.
All right, now looking at the current numbers from the NCDC, we're seeing the second wave of Nigeria registering very high here, with yesterday's numbers coming at over 1,861 cases. You know, and we've seen this trend, you know, in the past 2 to 3 weeks so far. You know, it speaks quite a lot with what needs to be done. And then when you talk about look about vaccines coming into Nigeria, we're expecting just about 100,000 just coming into Nigeria sometime early in February. You know, what do you think about Nigeria's vaccination drive and our approach to combat the virus?
Well, I think it's something that we need to take a focus on, because I was quite worried when I heard that there's only 100,000 doses on the table. But don't forget that you need 2 shots. So we only have 50,000 vaccines available for a population of 180 million people. So therein lies the problem. I think the Lagos State government also announced an initiative recently that they will also be acquiring some vaccination for their own citizens at state level, which is also a welcome development to assist whatever programs that the federal government might have. So that in itself is a welcome development. But outside that, I think we really need to address this issue of vaccination more seriously. And we need to decide, probably because the vaccination is not on the horizon, maybe we need a modified lockdown to be able to slow down the infection rates. But there is a strategic challenge that we need to address very quickly, since we don't have the numbers of vaccination that we need to have.
Well, now let's go into what the government needs to do more to attract FDI. We saw FDI shrink from last year, from 2019 actually. We recorded about 3.3 billion in 2019 in FDI. We saw that play out to be about 2.6 billion in 2020. And sadly, we see that amount is one of the highest in sub-Saharan Africa. But for you though, what does Nigeria need to do more to, you know, despite the pandemic, to attract more of these investments into the country?
First of all, I think, let me say that Nigeria has one of the best investment incentive promotion laws, you know, on paper. So the issue with Nigeria is not our regulations or our laws. The challenges with Nigeria is our ease of doing business criteria, and of course, focusing first on local direct investments. You have to take a look at, first of all, local direct investment, which I mean that the people in Nigeria here, or the businesses who are here already in Nigeria, you know, how are they being treated? What sort of incentives do they have to invest? If you create an enabling environment for the local industries and you drive local direct investments, then you begin to see expansion of industries. People who are here already begin to expand their factories, expand their services, because the environment is right. When you have that optimal operating environment, then you will attract foreign direct investments. But what is more important, that if we do not have sustainable policies, and if you have the challenge of this lingering fiscal deficits that the government has not addressed how we're going to finance it, you do not send a strong signal to foreign direct investors. Even the portfolio investors are beginning to take a look at this with some amount of caution. So what is important is that we need to encourage the local direct investments, people here already, and then we need to have sustainability policies. And you find that the FDI flow